Welcome back, all my fellow hustlepreneurs. Welcome to the Hustlepreneur Life Podcast, Episode 4. I'm a little bit different of a scenery today. We're traveling at the in-laws' house right now for the holidays, so a little bit different of a backdrop, but nonetheless, we're going to continue the podcast. Today, I have Shannon Weinstein on the podcast. She's a CPA and a business tax specialist, so she's definitely going to be able to answer a lot of tax questions that business owners have. And a lot of small businesses just simply aren't that knowledgeable on taxes and aren't taking advantage of the taxes the way they should be. So hopefully she can answer a lot of questions. I mean, it's going to be extremely helpful. So without further ado, let's just get right into it and bring Shannon on. Hi, Shannon. How's it going today?
Hey, good, Dylan. How are you?
Good. I'm glad you were able to join the podcast. Definitely excited to have you on. I think, you can answer a lot of questions when it comes to business taxes and just helping the everyday kind of entrepreneur. And I like to just kind of think of it as like the beginning entrepreneurs, because I think when it comes to small business, a lot of small business owners just unfortunately don't know a lot about taxes and just the different tax advantages and just, I mean, really just taxes in general. It's a very kind of mystery for a lot of people. So yeah, definitely give a little bit of a rundown on who Shannon is and just kind of what you do for a living and how you help people on an everyday basis.
Yeah, so I've been a CPA since 2009, and I'm also a fitness instructor. So how I actually started serving small business owners was I jumped into teaching group fitness and noticed that my friends were trying to start their own businesses, go off on their own online, and do all of these sort of self-employed ventures, right? And they were getting money on the side from their usual gym, and they were asking me questions about taxes. And what I realized was there was a huge gap in what small business owners learn about taxes without learning the hard way by making mistakes. So I decided to dedicate my own practice to helping small business owners kind of navigate that.
No, that's awesome. And so how long have you been doing that?
Since 2015, so about
Okay,
5 years now.
nice. And how long have since you've been doing the fitness stuff?
That was 2013.
Okay,
So yeah, so I've been teaching for about 7 years.
nice. And so were you kind of, was that knowledge of taxes and stuff kind of, again, fresh to you or new to you when you were first starting out, just trying to figure that out? Where did you learn some of that knowledge on taxes? What were some
Well,
resources?
I have a degree in accounting, and I had my
Okay,
license, so I knew a lot about taxes. It was my full-time job, but what
gotcha.
I didn't realize was growing up with a father who was a CPA and learning it in school, that it wasn't common sense. Like it
Right,
just becomes
exactly. Yeah,
ingrained in you, like learning a language, and you're
right.
like, oh, you guys didn't learn this too? And then you unwind it and go, oh no, I know that because I studied it and because my dad, pushed it into my head when I was younger.
Right.
So what I realized was there was a big gap in what universally we're all taught about taxes, about what to expect, and about money. That's why I leaned into that and started teaching more.
Do you think taxes are kind of a big reason why some businesses succeed and some businesses, maybe struggle a little bit more? Is just simply just the tax benefits that they're unfortunately not taking advantage of, or just that the unknowns of taxes?
I think you hit it when you said the unknowns is
Right.
what stops them.
Mm-hmm.
It's any unknown. It's
Right.
not knowing what to expect, not having a plan, not thinking strategically. It's being reactive instead of proactive. And that applies when it comes to your money as well and taxes.
Right. I think growing up, it's always been like one of those things that uh, everybody knows, like, oh, I started a business so I can write off meals, or start a business so I can write off, like that. That's like when people think of like somebody owning their own business, it's always like, oh, you get to write off meals and you get to do this, but it's like, there's just way more that goes into it than just, trying to write off dinners and stuff. Or they're like, oh, I can buy a camera and write it off under my business or something. And it's a total misconception of, kind of what can be wrote off, what actually, can be wrote off, how much percent of the, can be wrote off, and just different things like that. So, yeah, I
Yeah,
definitely think
yeah. And
it's
you should never start a business just to write something off as a business expense. That's not the point.
exactly
And writing things off doesn't mean you get a rebate from the government. They don't send you the money back. It just means that you get to take it as an expense on your books, but you still have to pay taxes on your profit. So
right,
it's not really a huge tax benefit. It's like spending $100 to save $20. It's like you still spent 80.
right, exactly.
Yeah.
So give us a little bit. I guess the first kind of topic I want to discuss is just basically, yeah. I mean, when you're starting a business, say, first of all, what kind of businesses? Kind of lay down the different taxes for the businesses. So there's what LLC, there's sole proprietorship, S corps and different things like that. Do you handle all those type of business taxes?
Yep, but there's really no tax difference between an LLC and a sole prop.
Okay, so those are going to be the same. Now, the difference is when you jump to an S corp. Now you're going to have a lot of differences for an S corp.
Yep.
So I
Yep,
guess
there's a whole separate business tax return, and then there's a different treatment around self-employment tax and the fact that the owner has to take payroll and a salary. There are a lot of requirements to get S corp status,
Right.
but you do get a lot of tax benefits out of that.
So I guess let's discuss some sole proprietorship and LLC taxes, because I know a lot of people just starting out generally are going as a sole proprietor or an LLC. So when it comes to business taxes, what are kind of the main things that people should be keeping track of? And I guess as a general, we can try to use it. We'll use an example a little bit later, just as, pick a barber or pick some type of person and just kind of tell what they would do. But in general, what are some main business tax prep things you should be doing, or what are some main things people should be tracking throughout the year to take advantage of tax write-offs?
Yeah, so if you're a sole proprietor, which by the way, a sole proprietor is somebody who is in business for themselves, whether they've and they haven't necessarily filed for a specific entity type. So you're a sole proprietor as soon as you sell something or as soon as you decide you're in business, you're a sole proprietor. That's the default position. So people who say I want to file as a sole proprietor, actually you're already a sole proprietor and you would file as an LLC or as another entity type. So that's the definition of the sole proprietor. And for sole proprietor or single member LLC, the most important thing to remember is to keep track of all your expenses and to keep your business bank account separate from your personal bank account. Those are the biggest things I see in terms of mistakes that entrepreneurs make.
Now, can you get a business bank account without having filed for an LLC yet?
You can, but what you should do is go to the bank. If you say, I want to open a business bank account, they're going to ask you for your EIN number. And that might stop you right there because you don't have one yet. Instead, go and say you want to open a personal checking account under your name, under your social, if you're a sole proprietor, and then you'll know it's dedicated to business. What's more important is the separation, not the label.
Yeah.
So just make sure you have a separate checking account dedicated to your business if you don't have that EIN number.
So you could even use a personal credit card, just make sure that credit card's only being used for business, so okay, everything that I spend on this is for business use.
Yeah, as long as you're separately dedicating it, that's what really matters in its essence. But I always recommend exploring the LLC route and the EIN because of the limited liability that it comes along with that, so that you don't have to worry about, someone sues you, your business coming, or your business being subject to that, or vice versa. So it's nice to separate the assets over time once your business grows.
Now, as a sole proprietor, again, growing up too, you learned about DBAs. And, when I filed for, the main reason I filed for LLCs and was taught to file for LLCs is that personal protection that you were talking about. Is that what you would suggest to people starting out, is to go for an LLC? I know you can't probably tell people what to do, but when do you choose a DBA over LLC or a LLC over a DBA?
So I guess let me start here with scope of practice, right? So anything around this stuff is a lawyer, not an accountant.
Right.
That should be advising you.
Exactly.
So me as your friend listening,
Yep.
not giving legal advice, I tend to see a lot of benefits in the LLC because of that protection.
Right.
And as your business is growing and as you go on, I think that you're going to want to have that protection, even if you don't have a ton of assets right now. And there's a benefit to a duration in business. So let's say you don't have any income coming in yet, and you're thinking, well, I don't need an LLC yet. If you know you're going to want it eventually, my tip would be to explore it right now, because then the clock starts ticking with your time in business and you become more attractive to lenders and investors. Because if your business grows and you get into that position where, let's say, you need to get a loan, how long have you been in business? If you say 2 weeks versus 2 years, it's different.
Right.
So it's important to start that clock sooner rather than later if you know you want to go that route eventually. But as far as DBAs go, DBAs are more so you can operate under an alias, so to speak, and that you can use a different business name. So I might have Shannon Weinstein LLC, but I can DBA as different business names that are akin to what I'm doing. Let's say I'll use fitness as my example. Let's say I have a personal training business and a nutrition arm and a couple of other things, and I want to operate under different brands. I can do those DBAs under my LLC without having to create a whole new entity.
Right. Now, for tax purposes, is there a benefit of one or the other?
There's absolutely no impact to taxes.
Okay, so DBA, LLC, it's all pretty much going to be the same with taxes.
Yeah, think of it as like a person. No matter what you name them, they have all the same organs.
Okay, yeah.
It's just a label.
Right. Now, with taxes too, again, I mean, there's different things from mileage to home office, different things like that. So again, this kind of using an example. So we'll start with, say, a barber that has a physical location. Maybe he's renting a chair, stuff like that. What are just some basic things that maybe a barber, would need to know to, take advantage of taxes, basically?
So any business expenses that you can take as write-offs have to be ordinary and necessary in the course of business, right? Mm-hmm. So for a barber, that might be all the supplies, right? The scissors, the cleaning supplies, shampoos, things like that, obviously.
Right.
And then the rent for a chair, it just depends if they have a physical space, if they own it. It depends if they have any large assets that they've purchased. But in general, I think that the business expenses are going to be driven around supplies. That'll be what's used up most often. Mm-hmm. And then if they need to travel, let's say they're doing at home during COVID, they're doing visitations to homes, mileage would be something to consider there. And any other ordinary and necessary expenses in the course of business. My general rule of thumb is ask yourself, would I be spending this if I were not in my business? If I were not in the business that I'm in, would I be spending this money? And that's a good indicator to start off with as to whether it's a business expense.
Right. Now, as a barber, if they bought a new car to travel to work, is something like a car can be written off, or is it just the mileage itself? Can the actual expense of a car be used as or deemed as, bought for business reasons?
So I'll qualify this with, if you qualify for the mileage deduction and you qualify for mileage and business use of a vehicle, there's two different methods. One is the mileage that you can take, which is a standard rate per year. Mm-hmm. And then the other one is actual expenses, which is you would determine from the miles that you're driving for business divided by the miles that you've driven in total for the year, the business use percentage. So it's a proportion of how many miles you've driven that's dedicated to your business. Mm-hmm. And you can take that percentage and apply it to the actual expenses to own and maintain your vehicle.
Okay.
Now, in your example, the barber driving to the barbershop would not be qualifying.
Okay. It would only be if he was doing house calls or something like that?
Right, because that's the principal place of business and is considered a commute.
Okay.
So that's not part of the mileage qualification. But if you do qualify, and you can ask any accountant that you work with whether something qualifies, you want to be tracking those miles throughout the year. And my number one tip I give my clients, and I give them an email every January 1st that says, hey, go log your odometer right now. Mm-hmm. Whenever you're January 1, log your odometer so you know how many miles you've driven in the year. Mm-hmm. Or you can also save those receipts that you get from, let's say, oil changes and other maintenance when they check your mileage. You want to be keeping up with how many miles you're driving in the year so that you can take advantage of actual expenses, because that typically is a little bit more beneficial for most of my clients. But the problem is that they don't have exact figures of those miles all the time.
I know. I think that's the toughest thing is like tracking mileage, which I found an app called Everlance because I've been doing some stuff recently where I had to track my mileage, and it definitely works. So I guess, finding those apps and stuff and doing your research on that could definitely save it, because it even has a feature on there where it will actually log every single trip you take. It knows your location and then asks you, was this for work or was this for personal? And then it will log it. Or you can simply just start a manual tracker each time, and it adds up everything. And so I definitely, I think those type of things will help too with people. So, all right, that was kind of like a barber scenario. So let's do, say, somebody working from home. So maybe a graphic designer or something that's working from home and has a home office. I mean, what are some some of that home office type things, how do you determine how much of my rent or mortgage I can, classify as, my office?
Right. So the home office deduction, there's two qualifying factors. Again, it has to be used, it has to be the principal place of business, meaning
Mm-hmm.
that has to be the place where you are primarily working. That is your HQ, if you will. And it has to be only used for business. And that's very strict. So, for example, your kitchen island is not your home office
Right.
because that's not just the place where you do business. I hope. I hope everyone's cooking at home
Right.
and
Right.
doing
Right.
something
Right.
on their kitchen island other than business. So
Yeah.
it has to be a dedicated space used only for business. And the IRS is so specific about this that I got rid of when I moved into my home office,
Mm-hmm.
when we moved into the house. I got rid of my like under desk elliptical because the
Oh,
IRS
okay.
would call that a gym.
Oh, wow. Okay.
That is how specific they are.
Yeah.
So
So I guess like the man cave that you got the surround sound and the home theater in, and also the office. I mean, that's you wouldn't
But
be
you could
able
take
to.
the office, right? You could take that space that
Okay,
is
so it doesn't have to
dedicated. So
be
if
a
your desk
physical
is
room. It
only
could
for
be
business, then
right.
it's just that
So you
square
literally
footage.
have to measure out that square footage and calculate that. Okay.
Yeah. Or you can take, so there again, just like the miles, there's two different methods on home office. There's the
Mm-hmm.
standard home office deduction, and then there is the actual expenses again for the
Mm-hmm.
house. So the standard is $5 per square foot up to 300 square feet.
Okay.
So you can just take $5 per square foot for the home office. You can also take the actual expenses by doing, again, the proportion of space that you're using for business over the home square footage.
Mm-hmm.
And then you can take certain actual expenses like mortgage interest, insurance, repairs and maintenance, internet utilities, things like that. So you get to take a portion of those related to business if you qualify. But you have to make sure that you are strictly qualifying for that because that is something that the IRS tends to scrutinize in an audit.
Right. And I know you are a CPA, so your answer might be what some people would say biased, but I think it's going to be the right answer. Should all small business owners link up with a CPA and hire a CPA to handle their accounting and taxes?
I mean, if I said no,
Right, right.
no, of course they should. I think people underestimate, or I should say overestimate, the commitment
Mm-hmm.
to work with a CPA. They think, oh, well, CPA is expensive. They're going to bill me by the hour. I'm not ready for that yet. They think that they're not ready for that yet. And nothing could be further from the truth. I think the earlier you can get the right advice from a professional, the better off you'll be in setting the right habits and foundation in your business.
Mm-hmm.
And then you don't really need their help until, you have questions.
Right.
And I think that it's really important to establish a relationship with someone you trust as a professional, whether they're a CPA or an enrolled agent, an EA. That is a tax qualification, a tax preparation qualification, tax experts,
Mm-hmm.
or if it's just an accountant, somebody who works with you. You have to find someone who knows your industry, knows your business, understands what you do, and that you can rely on to respond to you if you have any questions. That's what's really important.
Yeah, because I think a lot of people, until I guess when they are starting out and they're trying to do it themselves, I mean, again, the amount of preparation and the amount of, I've done it, again, my businesses are small, so, I mean, it is a little bit easier for me to try to figure out. But even me, I mean, with mileage and different things that I've never really tracked until, now where I've like, no, I got to do it. It all adds up, that's the whole point. I mean, I'm driving, I need to track it. So, yeah, I definitely think also, that a CPA is definitely worth it because, again, the amount you're going to save people and the amount that just the savings in general are going to be well worth having it. And, again, the headache, I mean, it's all about delegating, right? I mean, like you said, there's only so much you can do in your business. And if you truly want your business to grow, you got to lean on people. I mean, you got to use the resources out there, whether it costs money. I mean, not everything in life is free. Honestly, normally the best things aren't free. So you got to spend money to make money. So no, I definitely think that too. I would highly suggest also people to get a CPA. I definitely, from the business owners I spoke to, I mean, they've raved about, how much of a lifesaver it is having a CPA. And that's, again, why I wanted to bring you on, is just to help, show people and realize, have people realize, how much goes into it. So we'll kind of transition again to what are some top 5 mistakes that you see business owners making? Again, whether it's like I said, not tracking mileage, or what are the simple things that they could do that you might see from time to time where it's just like it's the easiest thing, or whatever you deem just kind of like the top 5 mistakes you see business owners making when it comes to taxes.
Yeah, and I kind of laugh because I'm thinking they're easy for me,
Right.
but they're not easy for everybody.
Right.
And that's not what I mean is a lot of this stuff is very complicated. People have very different relationships with money, very different history, understanding money and learning about money, and a lot of different emotions that are associated with money. So what may be a very simple thing, like not putting a stack of IRS letters over on the back burner and never opening them, right?
Right.
Like the biggest mistake I actually see is people avoiding it altogether and like saying, I'm just not going to deal with that.
That's crazy.
And the simplest thing is to open an envelope, but it is so difficult for people.
Mm-hmm.
And that's why I think like the easy thing to do is just like face it head on.
Right.
But a lot of folks are very hesitant to do that, especially new business owners, because they feel like, well, I don't really understand this stuff and nothing's happened yet, right? I'm not making enough money, or whatever stories they're, telling themselves, like, I don't make enough money to report anything to the IRS, or I'm not ready to hire an accountant. They minimize what they're doing. And I think that fuels this idea that they can just wait around or they can hold off. And by then, that's when it actually becomes a problem.
Right.
So to say, just face any money stuff head on, look at it, ask for help, and don't be ashamed to reach out to someone who is an expert in these things.
Now, do you need a CPA all year long, or are you able to kind of go to them? And I know, again, that nobody's probably accepting clients in December or whatever, but I mean, can you take just your just stack of papers, or your like, here's everything, can you help me? Or kind of how does that work?
So I'll call that mistake number 2,
Okay.
which is that most people think that they just meet with their tax preparer, their accountant in tax season to get their return, or some people don't even meet with them. Sometimes and even before COVID, right?
Mm-hmm.
Sometimes it was drop your stuff off in the mailbox. I'll call you when it's done. We'll mail you a copy. Like, it's zero touch, and you have no idea what they're doing.
Mm-hmm. Yeah.
But you're okay with it because you're saying, well, I got a return, I'm getting a refund, or whatever it is. I trust them, and you're cool with it. But my advice is that one of the mistakes I see is people think that's all they need. Mm-hmm. And the reality is, you really want to, you're trusting these folks with like your bank account information, all your numbers, your social security number. I expect you want to have a better relationship with them,
right,
than just exchanging the tax documents. So if you have a CPA, you should be using them, and you should be meeting with them year round. So there's a seasonality to what you should be thinking about. You should be always looking at your cash flow. You should always be looking at your estimates, for example, for taxes. Are you up to date with your estimated payments? Looking at your profit and loss at least quarterly, and understanding what these things are telling you. Mm-hmm. And what I love about what accountants do now, as opposed to what they did 20 years ago, is that we are now telling the story of your business through numbers. Like, we're helping you understand what's going on and communicating that to think strategically. You should have them as an advisor year round that you can go to, like your CFO. Mm-hmm. And I think that you're missing out on a huge opportunity if you're only meeting with them once a year.
Yeah, I definitely think, again, like you said, things come up. And so it's like, you can only lean on YouTube and Google so much, and having, it's almost like a mentor in a sense. It's a tax mentor at the end of the day. It's like you said, an advisor, somebody that can help you with knowledge of taxes. Because it's like you said, if you never gain knowledge, and you're going to learn more about your own taxes by working with the CPA year round, and you're going to help your own business out by, the little things that come up. But like you said, if you're totally out of touch and just give it away, you'll never learn. And I think it's important to, even if you don't handle it yourself, I definitely think it's important, like you said, to know every aspect of your business, and you should know about your taxes, and you should know the ins and outs, because again, like you said, it needs to be more of that personal relationship, so you can help yourself out at the end of the day. Do you have a few more, any couple more kind of
Yeah,
basic
I would
things?
say not keeping the personal and business separated is a
Okay.
big
Yep.
mistake.
Mm-hmm.
It's really important to keep those things separated for two main reasons, really three. And one is that for your accountant, because if you hand me a stack of personal bank statements and I have to figure out what's business related just by
Right.
looking at it, I'm going to charge a ton
Mm-hmm.
of my time
Right.
because that's just you're going to pay for it now or later, right? Like
Right.
if you're going to do it or I'm going to do it, it's going to cost someone hours. It's just that my hours are showing up on a bill to you.
Right.
So it's really important that you make it as clear as possible what's business, what's personal for the sake of your tax preparer. Um, the other thing is, if you ever get audited, one of the first things they ask you for is a set of bank statements. They do a bank statement analysis. So if you hand them your business bank statements, that's all they're going to ask you for. If you have Schedule C, which is the sole proprietor LLC, right?
Mm-hmm.
So they're going to ask you for the business bank statements. They're not going to ask you for your personal bank statements unless you are taking some crazy personal deductions.
Right.
Now, if you don't have the stuff separated, you have to hand them your personal bank statements. And then that's just inviting someone over and
Right.
basically opening up the bedroom that's messy and saying, look at
Yeah.
this. You
Yeah,
know,
exactly.
it's not a good idea.
Yeah.
You want to keep it controlled in terms of what you're showing them.
Mm-hmm.
So that's a really great option just to, create that ease through an audit.
Mm-hmm.
And then the third reason is really you should want that. Like you should want to have everything separated so you can keep track.
Right.
It really serves you as the business owner primarily, first and foremost, but there are those other residual benefits to accountants and auditors.
Yep. Any more?
We asked for 5, so we got 3.
Yeah.
We're going to do 4 would be, I would say not taking advantage of all the deductions they're entitled to,
Mm-hmm.
maybe out of just feeling like they want to be conservative or, I like to say 95% of the tax code is what isn't taxed. So basically the tax code is everything is taxable and then 700 something pages of what isn't taxed. So there are incentives out there for business owners. The government, Congress,
Mm-hmm.
Our whole legislative system has created incentives for business owners to create jobs, to boost the economy, to build commerce.
Mm-hmm.
So if you're doing that, you're serving the intention of what the tax code incentives are meant to do. So by claiming the expenses you're entitled to, you're actually following the rules.
Mm-hmm.
So that's kind of a philosophy that I've adopted is you want to make sure you're taking advantage of every expense you're entitled to and understanding what those exactly are. And that's where having a professional comes in because it's different for everybody.
Right.
And you're going to want to make sure you know exactly what is or is not deductible.
Yeah, I think that brings up the point again where I said the graphic designer who works from home, a barber, like there's just so many different variables that, like you said, that apply to one person but not the other. So yeah, it's just, again, you can Google and YouTube as much as you want, but you might be getting the wrong info because it might not actually apply to you. So yeah, I mean, definitely having that professional helps. You got a number 5 for us, or can you think of a number 5?
Yeah, I'd say not hiring the right person to help you.
Okay.
So I know a lot of folks who hire accountants and they think like, oh, I'll just hire I'll use my dad's guy,
right? Yep.
My uncle, the family friend, the guy down the street, the firm that happens to be local,
Mm-hmm.
right? And the truth of the matter is, especially in 2020, we have so many choices on who we work with because I run like a whole virtual accounting practice, and I have for years. And you've been using Zoom. But what's funny is in 2020, everyone had to pivot virtual.
Right.
And everyone was adopting this model, and I felt like I was finally ahead of the curve.
Right. Exactly.
But you can work with anyone that you want to, especially now because people are hopping on virtual. So you can find someone who understands your industry, even if they're in a different state. You can find a professional that you can trust. You don't have to work with the most convenient option. That's what the most important thing is for me. I hear all the time from clients who come on board with me, their number one complaint is their accountant doesn't respond to their emails or their texts or whatever they're sending.
Mm-hmm.
That they seem to not have time for them or they feel like just a number. And it shouldn't be that way. It should be a very client service focused. So if you feel like you deserve better, you probably do. And you can find someone who's willing to give it to you.
Yep. Now, I mean, what are some tips to finding the right CPA? I mean, again, you are one, so I mean, you might have a little kind of insider. I mean, what are some of the things to look for? I mean, is working with maybe a private CPA better? Again, I guess we shouldn't use the word better because it's all, it's all different. But I mean, Yeah, what are some things to look for, basically? Are, like you said, are
Yeah,
there certain
I can go over
CPAs
some
that
of the
specialize?
differences maybe in the experiences that I've seen. And
Yeah.
but if you are going to a firm, what I would ask is whether so the person you're talking to might be the partner of the firm,
Mm-hmm.
but then ask them, are you the one working on my account? Because this actually happened to my husband. He was working with an accounting firm. He hired the CPA, and he ended up having the staff accountant who was a CPA exam candidate working on all of his stuff. And then actually, once we started dating, I looked into his books and I was like, what is this guy doing?
Yeah.
It was all over the place. And then he's booking entries that make no sense. They're charging him 5 figures a year.
Oh, wow.
And he's in a worse position than he was before the year.
Right.
And I just said, you have to ask, are you the one working on my account? Who is working on my account? What are their qualifications?
Mm-hmm.
It's within your right to ask those questions because
Right.
if you're paying for a CPA, you should be getting a CPA.
Mm-hmm.
So make sure that you have the right expectations going in on who's working with you. And the other thing I would say is ask how they bill. Like, just ask about what you care about. So if you're going in to work with an accountant, whether it's a firm or a private professional, just ask, what's your preferred method of communication? What's your response time roughly? Are you off any days of the week? I shouldn't bother you.
Mm-hmm.
Just start a good relationship and dialogue and put it out there in the open that, hey, I'm going to have a few questions. What's the best way to approach you with those questions or submit them to you to get the fastest response? How can I tell you if something's urgent? Will you address it? Just get into a rhythm. Don't be demanding, but get into a rhythm with them so you know kind of whether they can handle what you're looking for. It's kind of like dating or a relationship.
Right.
Putting it all out there and saying, this is what I like, this is what I don't, this is what I need. And you want to make sure that you have that give and take and that it's really clear from the get-go what the expectations are, because I see a lot of folks assume that they're going to get these immediate responses from their accountant. And I can speak firsthand. If you're going to ping me with a question on April 13th,
mm-hmm.
It'll take me a few days to get back to you.
Right.
But I like to say, like, I'm kind of shut down for questions. I actually proactively email my clients and say, if you have a question, this is what I want you to do between here and here, because I'm going to be heads down working on tax returns. So if it affects your return, communicate me this way. Other than that, I will get back to you within X and Y time, because at least if you set the expectation, they're not sitting there like, I wonder what happened to Shannon.
Right.
No, I'm telling you outright, it will take me a week to get back to you if you email me during this time frame.
Mm-hmm.
And they're okay with that because they know what the expectation is.
Yeah, like you said, communication. So yeah, just basically, whatever you feel comfortable with. It sounds like just talk, like you said, ask the questions. Because again, at the end of the day, it's your business. So whatever you feel comfortable with, make sure you feel comfortable with that person. Like you said, I like how you said it's almost like dating, because that's what, it basically is, because it's like you gotta feel them out. Like when you know, like when you know that's the one, like you'll know, because just by how you feel. But
yeah, and don't settle. Don't settle.
Yeah, and now, for instance, if somebody does settle, how easy is it to switch after this person's already got kind of your info and I guess the breakup. How does a business owner, again, because like you said, they shouldn't have to feel like they're stuck in the situation if it doesn't end up panning out. So I mean, what would your advice be to kind of move away if they need to?
So I actually have a really funny breakup story with a client.
Okay.
That they asked me as soon as they hired me. She signed the agreement, which, by the way, that's the token thing to hit on what you just said, is that you should have an engagement agreement with them.
Okay.
That also covers what happens during termination.
Mm-hmm.
Or if there's a notice period, right? Like sometimes, just like a landlord, you have to give a 30 or 60-day notice. So make sure that you're within that policy and their policy. But what happened was she signed on with me, and then she asked me, okay, I just made the deposit for Shannon. She goes, Shannon, how do I break up with my old accountant?
Okay.
And I said, well, as a professional, I do not want people to ghost me, so I don't tell people to ghost their other accountant.
Right.
Because all of us as accountants, by the way, we have a roster of clients that we budget, our income, we budget our time for tax season. So if you're not going to use me, tell me right now, no hard feelings, because I will make space for someone who does want to come in on board, and I won't decline someone, I'm going to make space for them.
Yeah.
So this person actually broke up with her accountant, and then they billed her the following month and beyond the notice period, like just an extra billing, and she disputed it. And they said, well, we did a lot of these free services for you back a year ago, and we did this for you, and we did this. It was literally like they have the breakup, and then the boyfriend or girlfriend is like, well, I bought you this, and I bought
Right.
you this for Christmas, and I bought you that, and I want all back.
Mm-hmm.
And
Yeah.
it was so petty.
Oh my
But
God.
that does happen.
Yeah. Now, is that again because there wasn't, she didn't look at the agreement, or it was just simply that they were just taking advantage of her?
So the agreement was spelled out clearly, and she abided by the agreement.
Okay.
The accountant was not happy about her canceling, so they started saying, well,
Yeah.
if you're going to cancel, we're going to bill you for all the stuff that we did. I don't know if that's within their policy. I didn't look at it,
Right.
but
Right.
as a
That's
client
crazy.
service business, personally, I would not chase that down to ruin a relationship or burn a bridge.
Right.
I would
Right.
just say, okay, sorry it didn't work out. Is there anything we could have done better? Um, and take the feedback.
Mm-hmm.
But if you are going to break up with your old accountant, what I would suggest doing is just being open and upfront with communication and selecting a reason. And by the way, you don't have to defend a decision like that. You can
Right.
just say, you know what, I found someone that knows my industry really well. I found someone who is, lower cost or whatever your deciding factor may be. And don't be afraid to tell them that. Now,
Right.
if someone comes to me and says, I found someone lower cost, I'm more concerned with them getting the right care.
Right.
So I usually will say, like, if they go from me to like an H&R Block, then I look back and go, maybe I didn't share my value as much. Like, what could I have done to exhibit
Yeah.
my value so that you didn't see that as a better option, right?
Mm-hmm.
I haven't seen that happen yet, but what I'm thinking is, as a professional, we want to know, like, what can we do better? And we should be seeking that feedback. So don't be afraid to tell them if there's something that just isn't working out. If you say, I just need someone who responds to me a lot faster,
Right.
and just let it be, because I think they should respect your decision. But it is like a breakup. It really is. It feels really
Yeah.
awkward sometimes.
Yeah. I bet.
And the ghosting is what I just don't like. I wouldn't want someone to do it to me, so I don't tell them to do it to anyone else.
Well, essentially, that would be bad business, anyways, in my mind. Even with a small business owner, I mean, they should look at it too. If whatever business they're in, I mean, same thing. If we use the barber aspect, no shows. I mean, nobody likes when somebody schedules an appointment for a haircut and they just don't show and you never told you. So, I mean, every business has that same feeling of that also. So, yeah, I mean, it's just do the one that you would want done to yourself. So, it's a good thing to again to always live by in life. So, I mean, same thing in business. Just treat people right, because again, it's all about networking. You never know. I mean, they could go to the other person and come right back and like going, oh my God, like I made a mistake. Like, so if you burn that bridge, there ain't no going back. So yeah, you never want to burn bridges. All right. So what would be kind of, again, for the business owner, what are some good, again, kind of tax prep scenarios? So again, what are small business owners missing out on? Again, I like I mentioned before, the mileage and stuff. What are kind of 5 tax code deductions that pretty much generally apply to most businesses that, again, they just simply are missing out, or that you think are important? Because again, like you said, what you might think is easy or that somebody should know, maybe it's not, or just, they're not thinking of. So what are kind of 5 good things that a business owner, when it comes to taxes, should be paying attention to?
Yeah, I would say, so I'll preface it with this. When you're looking at tax strategy, the number one thing you should be looking at is not what expenses can I create
Exactly.
for my business. It's what expenses do I have that I can convert into business expenses.
Mm-hmm.
So you want to find expenses that you may already have, or are essential to your business, that you can deduct. So, I mean, 2 of them would have been your home office and your mileage.
Yep.
Or your vehicle, business use of vehicle. But those are some of the easy combined personal business that are good. You can also take a portion of your cell phone bill. Most people don't know that. Portion of your cell phone bill related to business. And in the days of data usage, it's much harder to figure out your business percentage of use, because you're thinking, oh God, like I'm not logging all this time about what I'm spending. But my advice would be, go into your settings. I'm an Apple person, so I know how to do it in mine, but If you go into your settings, you can see for a time period the amount of data usage by app.
Okay.
And
Yep.
I look at the ones I use for business divided by the total data usage, and I get a rough idea of my percentage.
Mm-hmm.
So I can use that as a basis, because it's always good to have a calculation. If you're going to estimate a percentage of something, have something to ground yourself on, whether it be like a handwritten, like, okay, this divided by this equals this, put it in the folder. And then you
Now,
can say, well, this is how I got 70% business.
and what would be your suggestion to somebody that, maybe doesn't know how to do that, and basically, I don't want to say is making up a number, but some people probably, again, they're like, oh man, I don't know how to calculate that, so they just don't. They don't. What would you suggest to people? Do you just don't do it because it's safer and you don't want to, I guess essentially feel like you're lying about your usage? Or what's a good rule of thumb? Like, can they do 10% or 5% if they truly don't know? Is there
Yeah,
kind of a rule
you
of
can be
thumb?
conservative. I think if they truly don't know, I think they just have to think about like how many hours a day do you spend on, like, let's say you use Instagram for all of your, like I use Instagram for my business 100%.
Right.
So
Mm-hmm.
it's like, most of my Instagram data, most of like my email, like think about those types of apps, how often you're on there, X number of hours, like even if it's an hour a day or something out of the time, you can figure out some way of estimating it,
Mm-hmm.
even if it's just kind of a gut instinct, but you have to be able to defend it.
Right.
And the higher the percentage, the more defense you have to give. Because if you say, for example, if you said, my phone is 100% business,
Right.
I would call BS on that
Yeah.
immediately and say, well, what are you calling your mother with?
Right.
Right? So there's no way it's 100% business unless you have two phones. Now we're talking like, okay, that makes sense.
Mm-hmm.
Don't buy a second phone though, just to deduct it.
Exactly.
So it's more what story are you telling here? And a lot of my clients are in like the 60, 70, 80. If they're using, in 2020, right?
Mm-hmm.
So everything is done on the phone or on the computer. So I would say you have to kind of figure out what works for you,
Mm-hmm.
and what makes sense for your industry.
Like you said too, I think, like I said, the biggest misconception with especially young people getting involved in business and maybe not being, again, having the knowledge on it is that, yeah, they think, again, if I buy a meal, I write off 100% of it, and almost as if they get that money back in taxes. And that's just not how it works. A write-off is not, you don't get just the money back for it during taxes. That's not, a write-off, like you said, it's totally different than that. And I think that's a big misconception people have is that, like you said, they can just go out and purchase stuff and write it off.
Yeah, and there's a big mistake that people make. This is another one too that's a common misconception, and I'll get back into the deductions, but
Mm-hmm.
there's a big reliance on managing your money from your cash balance in your bank account.
Mm-hmm.
And the cash balance in your bank account does not necessarily indicate your profit.
Right.
So when you're taxed as a small business owner, this is a key mistake I see people make in their first 2 years or so. If you are looking at your cash balance and you're like, well, I only have a couple $100 left, that's all I'm going to be taxed on. That's not the case.
Right.
It's the profit of your business. So if your profit is, let's say, $20,000,
Mm-hmm.
you're going to be taxed on that profit. You're going to get a self-employment tax and you're going to get income tax. So, and the cash may have already been moved. The cash may already be in your personal account, paying rent, paying utilities, paying all your bills.
Mm-hmm.
So the timing is everything. So if you're going to make about $20K for the year, you're going to have, let's just say about $4,000 in tax.
Mm-hmm.
So if you don't have that $4,000 left over, that's where people get stuck. They forget that they have to pay taxes, and they should be paying them throughout the year, but by the end of the year, you should be paying enough in estimates to cover that liability. And that's how people get into trouble with tax bills, is because they forget that taxes aren't automatically taken out like they are in a paycheck.
Yep.
And that they're responsible for owning that,
Mm-hmm.
having responsibility over it. So, and the cash in your bank account has to cover that.
Right.
But the cash is not necessarily your profit. So just
Mm-hmm.
moving the money doesn't mean that you don't have to pay taxes on it.
Well, I guess so that can go into the deductions part. So first question or kind of follow up to that is there a rule of thumb again, or what are the percentages? How does a business owner, what percent of the tax or the income they're going to have to pay?
Right. So that's different for every person.
Mm-hmm.
And if there was one number that you could Google, I wouldn't have to take a 4-part exam and have to do
Right.
2 years of,
Right.
right? Like I wouldn't need to get a certification to do
Yeah.
this. But it's different for every single person.
So again, your CPA,
Because,
just working with your CPA, they should be able to tell you generally, because that's the biggest thing. Like you said, like how do I know how much I have 20,000. Like how do I know what I'm supposed to have? That's the scary thing,
right.
I think, like you said, for a lot of people.
Yeah, exactly. And I think that asking that question for an accountant is kind of like asking a trainer, how many calories should I eat? Like the first day you meet them.
Right.
So how many calories should I eat in a day?
Yeah.
And it's like that, that number is different for every single person.
Right.
It's the exact same question.
Mm-hmm.
So people say like, how many should I, and I'm like, I don't know. Like, tell me all of the things about you and maybe I
Right.
can give you some help. But that requires a relationship. And that's why it's important to have that person that you can go to that knows you, so
Mm-hmm.
that you're not just going to a storefront and getting, boilerplate advice.
Right.
So what I like to say is you should work with your accountant to figure that out. You should also look at what you did last year if you had a similar year
Okay.
and see really what your effective tax rate was, and you can kind of get an idea of what you should be paying. And with your tax return, you'll get, if you're expected to pay estimates, you'll get a schedule of estimates to pay for the coming year. So you'll get those amounts from the IRS and from your state agency in terms of what they're expecting you to pay.
Mm-hmm.
And then you can use your judgment throughout the year to say, well, am I overperforming where I was last year? Am I underperforming where I was last year? And you can adjust accordingly with what you're paying. But that's where those quarterly check-ins help with my clients, because I'll tell them, hey, chip in an extra couple hundred because you had a really good quarter.
Right.
Or hey, skip that one payment because I think you're covered for the year.
Okay.
So it really matters to have that person offering that advice. So I would say get that tailored advice as much as possible when it comes to how much you should be paying.
Mm-hmm. And also, I think a big thing too people look at is making expenses right at the end of the year to kind of bring down the profit a little bit. I mean, what are some? Is that something a CPA gives advice on? Like, hey, if you need new equipment or if you need something, I suggest you do it this month to help out, or kind of what are some things like that?
So the timing of your expenses is basically betting on or against yourself.
Mm-hmm.
So you're basically betting, let's say it's the end of 2020, right?
Yep.
And you're thinking, well, 2020 is probably going to be a valley of a year.
Mm-hmm.
Like, let's say you're in a business like my husband does home improvement, right? So
Right.
let's say you're in that business because it's very difficult to get into people's homes during a pandemic.
Right.
So let's say we're at a low point in 2020 and you're going to have a really great 2021. It's going to pick up.
Mm-hmm.
We don't know what's coming, but let's
Right.
just say you have an expectation that 2021 is going to be better than 2020. If that's the case, then you're going to want to time your business expenses to offset that income in 2021
Mm-hmm.
more wisely. If you're already at a loss and you have the opportunity to buy new equipment that you need, again, we're not creating expenses out of thin air. We already plan to buy equipment, and the question is, or let's say a vehicle or whatever it is we're buying, and you have the question of, do I want to buy it this week or next week, which is in 2021?
Mm-hmm.
If you have that choice, you can be mindful about that choice and saying, which year does it make more sense for me to take an expense?
Mm-hmm.
And an accountant can help you with that, but you should also have the judgment as a business owner to think, okay, am I in a good position financially this year? Should I take the expense now and lower my tax liability? Should I take it in 2021? It's up to you.
Mm-hmm.
And then the same goes for if you feel like you're going to have a worse year, then take it in the current year. So you want to just make sure you're aligning your expenses with the income that you're generating.
Now, with those expenses too, I mean, again, like you said, say it's a car, say it's a camera, say it's something like that. How do you determine the percentages on like a camera? I know you said like a mobile phone, but like, again, cars and cameras, I mean, what are equipment? Again, how do you determine that percentage?
I mean, my first question would be, what is it being used for, right?
Right.
Like,
Okay. So yeah, actually, let's use
let's say there's
some.
a camera, but like if you bought a camera, I'd say I don't know what you're going to use it for, right?
Yeah. So here, I'll give you an example. So, for instance, I bought a new camera lens this year, and I'm using it for the podcast. That's kind of what I'm using now. And then I also have a clothing line. So that's a second business where I have to take photos using it. But then I just took pictures of me and my family for Christmas. So I used it for personal. So there's three instances where two were for business and they were separate businesses. And then the third one was I used it for personal to take pictures of us. So how would I even break that down into, three, where would that go?
Well, the initial question, sorry,
Mm-hmm.
the initial question I would ask you is, why did you buy it?
Mm-hmm. So I bought it for business. I did buy it for business. That was,
Right.
yeah.
So if you bought it for business
Mm-hmm.
and you said, I need this for the podcast, I need this for my clothing business,
Mm-hmm.
then I would consider that a business expense.
Okay.
The fact that you once in a while will snap pictures with it personally,
Mm-hmm.
to me is de minimis.
Okay.
It's not enough to do some type of crazy math to figure it out. Now,
Mm-hmm.
if you bought it because you were going to Costa Rica and you wanted to take pictures
Right.
of all these different things, and then you used it in your business,
Mm-hmm.
then there's a transfer to make it business related after the fact.
Mm-hmm.
But I would see it as that was primarily a business expense. So you have to look at what the intention and purpose was and if it makes sense for your actual business.
Now I have again the two separate businesses. So would I do 50% for the clothing line or 50% for the podcast? Or if like I don't take pictures that often for the clothing line, maybe I do pictures 4 times a year for like each season, and then I use the podcast lens once a week. I film an episode once a week. So what does it matter as much?
Too, and my previous answer and this answer depend on what entity type you have.
So they'll both be LLCs.
Okay. So you could actually have one LLC rent it from the other. You could also split the cost of it if it was 50-50. You could also figure out, well, I use about 30% for the clothing line, 70% for the podcast, and you could do it that way and split the cost out.
Mm-hmm.
As long as you're not taking more than the total cost of the camera.
All right, that's good to know. And the same thing with like a laptop. Like I'm using my laptop now, but I bought my laptop because I use it for everything. Because now I have remote access to do my everyday 9 to 5 job on it. So can I deduct from the year I bought it? Can I deduct like depreciation, or is that what they call it? Where you can deduct the laptop every year, or can I deduct the lens every year? How does that work?
So depreciation works where if you're buying an asset that's generally higher in cost, let's say over about $2,500,
Okay.
then that is potentially depreciable. There are certain types of assets that you can buy. And the whole idea of depreciation was that as opposed to taking all of it in 1 year, like let's say you bought a whole car in 1 year, as opposed to taking 40 grand in 1 year, they let you spread it out over time.
Okay. So you're not deducting all 40 grand that year and then deducting it. Okay.
No.
That
You're
makes sense.
deducting the cost, but spreading it out.
Okay.
So that you can take advantage of the fact that you're using up the vehicle. And it's just showing a monetary equivalent of you using the vehicle for the life of its whole useful life.
Right.
So let's say if it were like a 10-year depreciable life, now you're spreading that 40 grand into 4 grand a year if you were doing it evenly, which we call straight line.
Mm-hmm.
But there's other things now. There's other regulations, bonus depreciation. There's all these different ways to do accelerated depreciation. Depreciation is a very complicated subject, even for accountants.
Mm-hmm.
So that's where if you have any assets that you want to depreciate, you absolutely need an accountant to work with you to figure out the right method to use and if it's all within policy, because you could really, that is one of the easiest things that entrepreneurs can, if you get it wrong, it affects every year going forward because you're going to be carrying it over and over year over year.
Mm-hmm. Yeah, I know somebody that has a vending machine business, and he speaks about that because he's got like 30 vending machines. So he does the depreciation on the vending machines over time, and is that beneficial to do it that way, or again, is that something that is it just depends on each person's business setup? But say a vending machine company or somebody that a single person who owns 30 vending machines that's trying to figure out, do I deduct everything? Like, how does that, what would you
Yeah,
kind
and
of
it's
suggest?
not exactly a choice.
Hmm.
That's just a rule.
Okay.
Like you have to do that if you have a certain asset. So
Okay.
that's actually just within the code, but in reality, it benefits you because look at it this way: if you bought, let's say you bought 5 machines at 10 grand a piece,
Hmm.
you took 50 grand in deductions in year one, and then you just made money the rest of the years.
Yeah.
But let's say that was like the main expense, right? And
Right.
then you just made money from them.
Hmm.
No, let's just take maintenance out of it and all the other stuff. But let's
Hmm.
say that was the expense. That's really unfair to you to grab a 50 grand loss in 1 year and
Right.
then have no other expenses for the rest of the time that you own it. So you're just making money and you're paying taxes on all that income.
Right.
But you
Okay. Yeah. True.
wasted all of that
Yeah.
in the first year.
Hmm.
So it's like you're wasting all your credits. It's like using all of your get
Yeah.
out of jail free
Yeah.
cards
Exactly.
in one play and
Yeah.
saying, I have nothing left to use now. Um, so that's how
Right.
it feels. It's like you want to keep those in the pocket for future years for
Hmm.
sure.
Now, again, this is, again, probably, it goes down to each business by itself, but that year end that we were talking about, when you have that excess money and, you kind of don't know what to do with it, is there just some points where it's like, again, just don't buy something to buy it, or like, just, I guess everybody's always trying to find a way to not, or pay the least amount of taxes they can. So it's just, it's like
Yeah.
they want to buy something, but is there times where you just tell them, like, look, it's, you got to pay the taxes this year. I mean, there's nothing to buy. There's nothing, it's just, it is what it is.
Yeah. So there's a couple of things you can do. So ultimately, you don't want to spend all your, like, you should never have the mindset that I don't want to pay taxes, so I have to make sure I don't make any money.
Right.
It defeats the purpose.
Mm-hmm.
You should want to be in a bracket where you're paying taxes and it doesn't even hurt you.
Right.
That's the idea. But if you want to minimize your taxes, which all of us should, right?
Mm-hmm.
If you want to minimize legally what you can do with taxes, taking advantage of those deductions, taking advantage of combined personal and business expenses and converting them into business expenses, right?
Mm-hmm.
To the extent that you can legally. And investing in things that make you money. So, for example, I have a lot of clients who invest in coaches, and they'll say, okay, I'm going to prepay. Let's say, here's another example. Actually, this is a great one. I have ones who hire coaches. I have ones who have brick and mortar spaces and pay rent. This is a great example. If you have excess funds at the end of the year and you want to lower your profit for tax purposes because you feel like you're just going to be in trouble if you don't, ask your landlord if you can prepay rent for the first few months of
Right.
2021.
Mm-hmm.
Right? Now, if you're a cash basis taxpayer, which most people are if they're an LLC or sole proprietor, this is a big condition. So if you're a cash basis taxpayer, then if you're paying those expenses in 2020, you get to claim them then, even though they're for what you're going to do in 2021. So I have folks who pay their rent early. Like I said, they hire a coach that they're going to use in the next year, but they can prepay a lot of those expenses to time the expense properly. So that's what I would do. I would not create more expenses to spend money. I would look at what you're already planning on spending and see if you can accelerate that.
Well, I guess that's a big point to point out too. Like you said earlier, your income or your profit for the year might be $20K, but you might only have $200 in cash. So do you only spend what you have in cash, or like you said, would you prepay using your business credit card, or would you do that? Or it's like, no, only use what you have in cash flow.
Well, you can always feed the bank account. So if you don't have the cash balance, and again, this depends on every person's
Right.
position, right?
Mm-hmm.
So let's say you have $200 in the business bank account.
Mm-hmm.
Let's say in your personal account you have 10 grand.
Okay.
Move money
Okay.
to the business account so that you have enough to cover it. So you can just infuse a little bit of cash into the business,
Mm-hmm.
and that's considered an owner's contribution. It's
Okay.
not income.
Okay.
You're just moving money geographically to the other account so that it can afford to pay the expenses that are due. And the whole idea is not to get to that point. That
Right.
to me is, if my clients are doing that, then I haven't served them properly, because we want to make sure that we are covering tax liability throughout the year so that if they do have that position, they're already covered their taxes.
Mm-hmm.
So they don't have to worry about having a tax bill that's greater than their cash balance.
Right. No, I think this has all been good knowledge for a lot of people, and I think they've definitely probably learned a lot from you. Where can they find more info from Shannon. You said
Yeah,
Instagram
so
and
yep, so I'm the most active on Instagram. I'm at Shannon K. Weinstein on there, and I try to do daily or so tax tips and information for new business owners.
hmm
And I also have my website, which is fitfinancialsolutions.com. That's my company. And I'll be kicking off in January my own group coaching program. This will be the third round of that for new entrepreneurs who want to get all their finances and structure set up in about 6 weeks without feeling like they have to overcommit to hiring a CPA.
and I think what's great is that you, like you said, I mean, where are you actually located?
I'm between Connecticut and Costa Rica.
Oh, nice. So, and again, they can reach. I mean, you can take on anybody, right? Because everything's
Yep.
virtual.
Yep, tax preparation is an easy thing to take on virtually and an easy thing to take on from different states.
Right.
So it really does not have a ton of borders. The only thing that matters is if your accountant is licensed in your state, if they're performing CPA level services like an audit.
Okay. And now, do you have slots open currently, or are you fully booked? How do you book ahead, or where do you kind of take on new clients, or how do you take on new clients?
Yeah, so I mean, given that this is going to be an evergreen episode, I'm
Mm-hmm.
thinking I'm always taking on new clients and taking interviews. So you can reach me on my website and just fill out the form to submit your information, and I'll let you know if at that time I'm taking new clients.
Mm-hmm.
At the time I am, but for specific services and for specific types of entities. So if you want to jump in, feel free to shoot me a message, and at least I'll have your information on file if things open up.
Right.
And I am looking for folks to join that coaching program. That's the biggest thing I have going on right now.
And I will link obviously all of your links in the description so people can look below in the YouTube link and get that, and then also in the Spotify and Google Podcast info, you'll be able to see the stuff in the links below. And I guess one last question would be, so when would are they able to reach out to you or kind of book you year round, or even CPAs, like you said, I mean, do they necessarily have to wait till January or December, or they can just, whenever you need one, just reach out?
No, quite the contrary. I think that you want to, it's like doing Christmas shopping, right?
Yeah. Mm-hmm.
I mean, it's going to sound funny, but do your Christmas shopping in August if you can,
Yeah.
because then things are going to go up in price. Things are going to be crazy,
Mm-hmm.
right? So I would say, no, do not wait till January to hire your accountant because they may already have a full roster.
Okay.
So make sure that you're getting in. It's like booking a hotel or a flight too.
Yeah.
It's never too early to say you have an interest in working with someone. So if there's
Mhm.
somebody you're looking for or you're looking to shop around, I also like to say do it when you're clear-headed, right?
Yeah.
It's like how you don't shop at the grocery store when you're hungry.
Mm-hmm.
You should go in with a clear head without feeling any rush. Like you have to get someone now, or you're not going to make it in time. You
Right.
should have a lot of patience and a lot of understanding about, okay, this is going to be a process. I should interview people and I should make a very mindful decision. And the best time to do that is around the summer and the fall. And
Mhm.
you can actually enact change in your business. So if they give you some good advice, you can start implementing it right away.
That's awesome. And then my last thing would be when you go ahead and you take on new clients, is that something that, like you said, they should be looking? I guess my point is, do you help them with past taxes? So, like, say they did everything themselves for a year or two, are you able to kind of go back and help them, or go back and help them basically with the last couple of years?
Yeah, I've done that before. So there have been times where during a consultation, they pull up their old tax returns and say, can you just look at this and do a sanity check to tell me if I missed out on anything?
Mm-hmm.
And I had one client who didn't really understand how the business deductions worked, was not keeping track of anything, and just kind of ballparked a bunch of numbers.
Right.
And then I asked her, I happen to know, I'm like, it was a fitness professional. So
Yeah.
I said, you did CPR, you did your continuing education, you did your certification. I'm not seeing any of that in here. You definitely spent hundreds, if not thousands of dollars. And she said, yeah, and I took a couple of trips for conventions too, and they weren't in there.
Yeah.
And I looked at everything. We saved her $4,000
Oh, wow.
in taxes by amending the return. So
Mhm.
if you ever feel like you missed out on something in the past, you can go back
Yeah.
and you can amend a tax return to be correct, and then you can get the difference paid back to you.
No, that's good. Again, I guess that's the feeling that I just wanted other entrepreneurs to know, is that, you don't feel like you're stuck. You can always go have somebody relook at something if you felt it was done wrong, or if you did it yourself and now you have the money to like have somebody go back and look at it, because I guess what is how many years is there kind of a too late thing? Like, oh, you can't go back 5 years, 4 years, 7 years?
Yeah, I think it's, and what's hard is the years boggle my mind because
Yeah.
it's like we're doing the year in the year after it was done. So I think it's about 5 years, if I'm
Okay.
not mistaken. I think the 2016s were, and this was a very strange year, but the 2016,
Yeah.
this was the last year you could do them. So I think it goes back 3-ish years.
Okay.
I'm not 100% sure, but you know, you can. That's easy to look up.
Right.
But you should be able to go back and, you know, if you need to go back and amend, you can. I believe the rule is you can amend them, but there's a limitation on whether a transaction can happen. Meaning that if you're entitled to a refund from like 2012, that I think there's a limitation on that.
Okay.
Like, you can't go back and claw back refunds from like 10 years ago.
Right.
But you can amend the return to report it properly.
Well, I appreciate Shannon. Thank you for spending the morning with me. Definitely, again, this is a quick turn and burn. So this episode will be up tomorrow night at 9 p.m. on YouTube, Spotify, Google Podcasts. And again, Shannon, thank you so much. Definitely appreciate you. And like I said, I'll link everything below so people can find you. And again, hey, maybe you'll get a couple clients or a couple people will reach out for more info. So that would be the ultimate goal, is to definitely hopefully inspire some entrepreneurs to go get help, because there's nothing wrong with getting help. And again, hopefully, you'll be able to help some people out.
Yep, that's all I want. Find the right help for you.
Right. Well, thank you so much. And, I'll definitely hopefully keep in touch a little bit. And again, I appreciate it.
Yep, absolutely.
Thank you. All right. So that wraps up an awesome episode with Shannon. I definitely appreciate her coming on. I think you guys obviously learned a lot from this podcast. I definitely did also. I mean, it helps me also. Like I said, I'm the host. I'm here to learn as well. I'm just trying to help other people learn and just give a platform for other hustlepreneurs out there to, again, learn about things. And I think taxes is a big one to learn about. So definitely check out Shannon. As always, the episode is sponsored by Royal Legacy Clothing. So check it out in the link below. Go get you some gear if you want. Very motivating. Everybody leaves behind a legacy. So make sure it's royal. But again, everybody, I appreciate it. And, tune in. Episode 5 will be on next week. I got another good guest on that one. So pay attention to the Instagram. We'll be making posts on who's on, which day. And again, I appreciate you guys. Have a good rest of your day. Thanks.